What is up, guys? Welcome back to another episode of Stonks Maxxing. Day 60, the big 60. I think this is. So it's been 2 months, not too long. But yeah, Stonks Maxxing. Today, kind of want to go over this article from Sequoia by David Kahn. I think he's a beast. He's put out some pretty good publications. I think the most recent ones talked about this 600 billion AI question, where I think if we look at the run rate for NVIDIA, maybe back 2-3 weeks ago, total AI capex spend was probably going to be around $600 billion. I don't know the exact details of the breakdown per year and what the actual breakdown is for hyperscaler spend, meaning how much is Microsoft gonna buy, how much is Meta gonna buy, how much is Amazon Web Services gonna buy. I don't know that, but I know in aggregate it is 600 billion, and I think it'll be helpful to maybe refresh. But this is a new article, so Steel, Servers, and Power, What It Takes to Win the Next Phase of AI. It seems like this partner from Sequoia Capital is interested in thinking about, okay, there is a use case here. It's been proved through a lot of consumer applications and enterprise applications that are serving everyday people and large businesses. And it's sticky. ChatGPT, Claude, Anthropic, Perplexity, all of these models, I think Claude is made by Anthropic, if I'm not mistaken. Okay, yeah. So Claude, Perplexity, these are some of the biggest foundation models today. You also have Mistral and Llama. Yeah, so you have these people that are kind of creating the actual software infrastructure, and I think the software infrastructure is pretty important for powering the next generation of AI applications. This is kind of like what a database is to software as a service applications today. Ooh, yeah, this is Sarah Guo. Shout out Sarah Guo. She brought up a good point where if you look at technology trends, the previous big technology trend was the internet. And the internet gave birth to a lot of software as a service companies, both internet-based, so web-based, and a lot of them are web-based. Okay, so I'll start from here. I think the previous biggest trend was the internet. Being able to go on websites and search the entire world for information. I think this gave birth to software as a service. The idea that you can kind of sell a software, and really this is just a website that allows you to do some type of operation. So I think eVestment is a good example. With eVestment, the underlying website, you can think of it as just a wrapper around a database. The database, the data is really the interesting thing that you want to interact with on that website. And yeah, okay. I keep getting off tangents. It's hard to think clearly. This is a skill I need to be able to build. Talking through things, making sure I don't stumble on my words, and make it concise. That is the best way, I think, to present. But going back to the idea, websites, they're just wrappers around databases. I think the future of applications could be just wrappers around these large language models. So that's kind of the next generation shift in technology. Ooh, okay. So maybe that kind of brings us to this article here. You have this complete shift in the computing paradigm. No longer, or you're shifting from using a database as your sole backend infrastructure, and now you're moving towards something like along the lines of a large language model. Along the lines of a large language model. Okay. Okay, let's dive into this. Steel, servers, and power, what it takes to win the next phase of AI. So the race to model parity has been the defining project of the last 12 months in AI. This phase was characterized by the search for new research techniques for training data. Bitter lesson. There's a rich son. Canadian computer scientist. Incomplete ideas. Damn, okay, so this guy is the OG of this stuff. So annualized capex for big tech increased from 138 to 229 billion year over year. This incremental 91 billion in run rate spending is a good proxy for new AI data center construction, an enormous investment. So this is a year run rate, kind of an annualized spend. Okay. So I thought run rate is the idea of, okay, you have $10 million spending in Q1, so quarter one. Okay, let me say that again. You have $10 million spend in quarter one, and the run rate is just 4 times 10. 4 quarters times $10 million per quarter. That gives you a $40 million run rate. So you assume this 10 is constant every quarter. Oh, okay, so this is, a big question, I think. It's left to be unanswered. Microsoft and Amazon, they're in this AI race together, but they also are in the cloud race, so I guess this is referring to the idea, okay, you only have so much data center space, how much are you going to allocate for people that want to use your models for inference, and how much do you want to allocate this data center space for actual cloud hosting or running cloud applications? AI in 2024. Oh, okay, so this is a while ago. Data center run rate revenue. This is the very first one. 50%, 50%. Okay. Okay. Overbuilding of infrastructure has often incinerated capital. Okay, I want to. So NVIDIA earnings. Microsoft earnings. Palantir. Let me see, Palantir. 29, okay, nice. I did sell Palantir a little while back. Okay, so 22.6 billion. Wait, let me see. What did David Kahn say in his Q2 2024? Oh, wait, no. AI 600 billion question. So, what is run rate revenue? The full-year equivalent metric is often used by rapidly growing companies. Yeah, so this is originally what I thought. Okay, so if it's a quarter, Q1 2024 actual, divide 90 by 4 quarters. That'll give you maybe like 22. So around 22, 23, 22.5 maybe, 22.5 million. Is that on par with what NVIDIA reported? Okay, yeah, exactly around 22.6. So Q4 2024, if you end up, so divided by 4, then that means $150 divided by 4, 15 divided by 4. I think it's probably close to 40, maybe like 38. So 3.8. I'm trying to think. 3.8 times 4. 4 times 8 is 32. 4 times 3 is 12. Bring the 3 over. That's 15.2. Okay. 15.2. That's close. So like a 3.8 or 38 million Q4 spend, yeah. Okay. I would like to add this. Okay. Maybe like heading 1. So AI. Using on AI. Okay. So David Kahn posted an analysis. Oops. So Sequoia partner David Kahn thinks there is a 600 billion AI question. Based on the videos, data center spend, revenues, estimated listener run rate revenues for Q4 2024. Today, they're already is a $363 billion question right now. NVIDIA reported 22 million, 6 million, billion, sorry, B in revenues, and it's Q1, so 2024, April 2024 earnings annualized, so 4 times 22.6 B, that comes out to around 90 billion. Okay. Then assuming is also this 141 GPUs. While NVIDIA supplies GPUs, they are only a single piece of the puzzle. Okay, while NVIDIA supplies GPUs, they are only a single piece of the puzzle in building out AI infrastructure. Assuming a $1 spend on GPU and $1 equivalent spend, there is a $1 equivalent spend on AI on data centers cost to operate them. Think of this as half splitting up AI spend into two halves. One is GPU spending and the other is data center development and operations. Okay, so this is more specific, yeah. Energy, buildings, backup, generators. What's this one? Now it's like 80%, seems like, maybe even 90%. Okay, so interesting. I didn't realize the H100 does use x86. NVIDIA data center. Super CPU. Yeah, I don't know exactly. Yeah, not entirely sure. DC facility build and operate. Oh, okay. For your rental opportunity at 50% utilization increase worth, 25% increase worth. Yeah, not entirely sure what this means, but I think this is actually the split, right? So the 4-year cost of AI infrastructure, 16K GPU, not entirely sure what the GPU is, but data center facility build and operates about half, GPU spend is also about half. You'll have some networking here too. Oops. The caption. So this is AI structure cost. From NVIDIA's I think this is Q4, right? Oops. October 2023 Analyst Day presentation. Okay. Then that means the total cost of AI infrastructure from a data center perspective is double the cost of the GPUs. Top of the cost of the data center. Companies want to keep their margins. using a so maybe this is gross margins. Like I'd imagine okay, I'm trying to think. Let me see. Gross margin, okay. End user for GPU. To make money as well, okay. I think this is their Blackwell 100. But yeah, when did, so Amazon earnings. Okay, Apple earnings? When's that? 8 days ago. Meta earnings. July 2024. So when I think of hyperscalers, alright, who are the big ones? Apple, Microsoft, Meta, Amazon. Mag 7, right? Or the Mag 7. I guess Alphabet? Yeah. Tesla, okay, Tesla's on there. Okay, so all earnings pretty much subsided at this point. Oh, there was a no priors maybe podcast. Lad Gill. I wonder if they have anything. Elad blog. Sarah Glow blog. Guess these are all okay. Nat Friedman, damn. Using the ceiling, okay. Weakest 2% of the year, damn. Okay, that is actually a good idea. It's important to do things fast, so because 2% of the year. Is it really? 7 divided by 365. Oh wait, 365. So yeah, it is about 2% of the year. Okay. Scroll price. Make things better to get your dopamine from improving your ideas and for having them validated. Okay. Only the best city in North America. What is that? Okay, this sounds like some type of utopia of sorts. I don't even know how I got here, but this is pretty interesting. Oops. It's not what I wanted. So 3. Well. There's some pretty impressive stuff there. Okay. Yeah, I'm kind of confused on this 50%. Maybe he explains it better in this article. Yeah, I'm not entirely sure why this doesn't include margin for cloud vendors, right? Yeah, so I'm like thinking through in my head, right? How long can this last? Like, I wonder how much cash does Microsoft, Meta, Alphabet, Amazon, Apple have to build out these data centers? I wonder if I could also ask some people on my internship for data center spending. Yeah. Yeah, I'm gonna ask tomorrow maybe. Data centers. Oh, okay, so this is kind of where this article comes in, I think. CapEx run rate. Okay. Oops. So when on the hyperscaler side, so the money that they're spending here, is it generally in line with this? Seems like it is. Okay, yeah, I'll be back in a sec. Gonna get some water from downstairs. Okay, I'm back. I gotta go downstairs and then turn on the AC a bit. I'll be back. I'm back. Ooh, let me get on this FaceTime call. Just wanna call, but I'm also streaming. Okay, nice. Put you by my desk. Yay. Girl, watch my stream. Watch my stream. Said on my freaking phone. Okay, so on the hyperscaler side, the story seems to support David's, or I think, is it David Kahn or Daniel Kahn? David, okay. David's thesis on a $50 billion GPU run rate, IQ for 2024. So one thing I think is worth noting is, okay, from the most recent non-farm payrolls report, you saw information employees or jobs decline, I think by 20,000, or is it 2 million? I forgot the exact, I think it's probably 20,000. So are these big tech companies sacrificing human capital, so employees, for hardware spend, right? Thank you. Do you mind? No, you didn't let me finish. I said, do you mind being on the stream or no?
A little too late.
Hmm?
A little too late.
Well, you didn't even give me a chance. How is this fair?
You should have said you wanted to be on the stream as soon as you said, I'm just streaming.
Hmm?
You're the one that should have said it earlier.
Okay, okay.
Seems like you don't know.
Say what?
Seems like you don't agree.
Agree with what?
Whatever.
No. Alright. Fine. I understand.
I'm gonna stream. I'm gonna finish cleaning up my room and then shower and call you back later.
Okay. Are you on your phone right now? Are you calling me through your phone?
Is there a way I can call you?
Yeah, you don't have an Apple. Shoot. Are you listening to music too?
I was watching some.
Alright, that's fair. Can't you just watch it on your computer and still call me? Hmm? Okay, you hate me. I see how it is.
No.
Alright.
What are you laughing at?
The way that you just closed your eyes and then looked back into the camera like you were a little frog.
I was doing a really hard blink for you.
Yeah. Alright. If you want to hang up then.
I'll tell you later.
Sounds good, sounds good.
But then the sooner.
That's nice, that's nice.
You ready?
Bye. Bye. Yeah, see it. Okay. I was just calling Allison. That was nice, that was nice. Alright. Maybe this Bloomberg article will be interesting. Okay, this is actually helpful. Microsoft's CapEx spend. So like this, it'll lease out data. I was about to say data frames, but data centers as well. Yeah, that's probably going to drive a lot of value too. Yeah. I think this is. Oh no, not this. Goldman Sachs Equity Research AI report. I think this is a pretty big one. There's an interesting graph. So why did it slide? I kind of forgot. Add this in here too. So yeah, is there an index of electricity company index? Let's say for like the past year to date, has this been just going up? Started at 378, 443. Okay, about 3 years. It is pretty volatile. No. Okay. Yeah, stocks really haven't responded too much. Seems like. Electric utilities. Five-year, 10-year. So it is at an all-time high. I guess it was already priced in maybe in 2023. Yeah, okay. You see valuations jump pretty much. Okay, so I guess you already see most of this value being priced in. Although, I wonder if there's like a PE multiple here. I feel like that would be helpful. Kind of seeing how much is actually margin expansion or multiple expansion versus actual fundamental growth. Questions. Would be interesting to do further research into utility company performance. Okay, that was that. All right. Forecast figure rising 287 billion just for these 5 alone. Okay. Okay, I think this was probably last week. Oh, April 5th. All right. Yeah, how much are these? So market cap of max 7. $14 trillion, Jesus Christ. When was that? Yeah. Today is August 8th, right? Percent of mag 7. 31%, so that's of July. So you also saw a rotation, right? Rotation from large cap stocks. Soft. Yeah, it would be nice to have like a little chart in Bloomberg. Okay, I think I might do that. So Bloomberg chart of all companies. Mag 7. Microsoft, Amazon, Google, and Meta reported earnings last week and have shown resiliency in AI infrastructure spending. So tech layoffs. Tell 15,000, geez. Okay. Oh, yeah. It's laid off 9 to 1. SAP. Toshiba. Alright. And nothing too crazy so far. 15,000 is a lot though. 14,000 is also a lot. What? They have a list of employees? Damn, okay. Oh, okay, it's just a small list. Micron. Alright. Earliest to latest, latest to earliest. Okay. So yeah, nothing too crazy into it. Yeah, so where are all the And the on the non-farm payroll decline, said that there was a loss in information jobs. Where is that? Doesn't seem like there's too much to kill here. Humble Games, Macari. %, shoot. Wait, is on semiconductor done? Shoot. I thought it was on semi. Oh, Redbox? No. Redbox is done for. Okay. Path. Okay, so I guess this is a decent collection here already. Ginkgo Bioworks. Oof. Okay, yeah, that's not too great. Sightful. Okay, there was another thing I wanted to look at. Yeah, with non-farm payrolls. I think it was this. How, I don't know what the actual units are here though. So I guess it's how many jobs were added. So less government employees. June, July, seasonally adjusted. Oh, okay, here are the numbers. Okay, so you do see a slight increase in the government. What are the biggest negatives here? Private education, credit intermediation, transit, okay. Passenger. Okay, so that is a bit cyclical. Private service providing. Mining and logging. It's not terrible. Construction. So you did increase construction. Manufacturing stayed about flat. Okay. Non-durable goods. It's also about flat. Trade, transportations, utilities, information. Okay, yeah, here we go. I think, oh, I see. This is just a broad, everything, publishing industries. Minus web search portals. So are these in millions? In thousands. Okay. So minus 20,000. Minus 2,000. Transit and ground transportation. So that one was pretty big. Minus 10,000 jobs. Shoot. Finance and insurance. Credit intermediation. Yeah. Professional business and services. So you've lost 1,000 jobs. Non-farm payrolls. Alright. Publishing industries was a lot. Telecommunications. Is there like a technology thing? Information tech. Computer infrastructure, data processing, web hosting, related services. Alright. I guess this is what Microsoft does probably. Non-farm payrolls. Why? Showed a softening compared to consensus. So see in Bloomberg the contributor to the decline seemed to be the information sector and transportation sector. Jobs, cyclical, construction, and not cynical, cyclical construction and transportation. Manufacturing jobs are okay so far. Okay. CapEx run rate. So Microsoft. Okay, so looking at this table here, you can see that there's 4 companies. These are your broad hyperscalers. And most recent quarter, Q2 2024, Microsoft, Amazon, Google, Meta reported earnings. This is the 1-year run rate of their total CapEx spend. And if you aggregate everything, it comes out to be around 229. Yeah, it's up maybe around 75% compared to Q2 2023, the annual run rate. Yeah. How do I put this into a story of some sorts? Okay, so Microsoft's Q2 CapEx was, I think, 22. But if you divide this by 4, maybe like 18. Around 18 billion. Amazon Q2 CapEx was around maybe like a 16 billion. So 4 times 6, that's like 64. Yeah. Google Q2 CapEx was around 53 billion. Yeah, so CapEx was around, not 53. If you divide 53 by 4, so 13 maybe, so around 13 billion. And Meta Q2 CapEx doesn't actually seem like a lot. So 34, divide that by 4, you get around 8 billion. Okay. Total CapEx spend for these hyperscalers are, so 8 plus 18, that's 26, plus another 16, that is 42, plus 13, it's gonna be 55. It's around 55 million, billion, okay. All right, so total CapEx spend for these hyperscalers is around 55 billion. Okay, that's good. And in terms of revenue, I mean, it doesn't seem like there is a lot. Just $55 billion alone. So on top of the data center, software companies want to keep their gross margins above 50%. Right. I think that's so another 2x on the 300 billion AI infra spend, which results in a 600 billion revenue quota in order to successfully to make AI a worthy investment. Okay, let me make a call real quick. That's crazy. No, they never want. No, yeah. Damn. That's crazy. Okay, yeah, it's pretty sick. I just got distracted by watching the diving. Apparently, it's a 17-year-old medal twice, so she got her first medal. It's probably when she was 13. Then that's crazy. Okay. So total capex spend for these hyperscalers is around 55 billion. Yeah, I wonder what revenues are for. Max 7 revenues. 61 billion. It's not even close. Okay, yeah, I'm gonna be back in a sec. Okay. Trailing 12-month revenue. This doesn't seem right. It's only $1 billion. 16 billion. Wait. Yeah, no, that doesn't seem. Revenue weighted. Yeah, no. Oh, so this is, yeah, the thing. Scorecard. year-over-year growth. Let's take a look at, I think Microsoft's probably. Microsoft yearly revenue, 211 billion. Yeah, that's just so much. Annual gross profit for 2021 was 115 billion. I mean, Jesus Christ, dude, that's a lot. Context. Oh yeah, it'll be Trading View Stock Screener. Primary listing. Sign in as Brian. It's kind of crazy how you have the first 7 here, really. These are all the companies that you really need. Where's Tesla? Oh, right here. Broadcom, yeah, okay. I don't want the market cap. Okay, I don't want any of these, do I? Let's bring the market cap here. Income statements. Custom, okay. Let's see if we can add. So financials. Total revenues. Showing 12 months. Yeah. Let's remove this. Remove. 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 Free cash flow. 12 months. Jeez, man. I mean, yeah, when you have a company that can generate $104 billion worth of free cash flow, I mean, is that ever gonna go out of business, right? Balance, cash. Okay. To this. Full year. Fiscal year. Apple has $61 billion on cash. Okay, wait. Cash and short-term investments, right? Cash. Debt. Total debt. Wait, quarterly fiscal. Huh, I didn't realize Apple was taking on that much debt. Microsoft too. Maybe to build out their operating incomes showing 12 months. And net income showing 12 months is good. Okay. Should do quarter? Nah. I mean, yeah, I feel like probably is more than enough. Alright. Microsoft, Amazon, Meta alone have enough for 600 billion revenues 1 year, but how much of their revenues is used for AI spend? Yeah, I kind of got deep into this and I didn't even get to look at the Google thing. Should take a look at that. Okay. Yeah, I didn't realize Apple earnings had $101 billion worth of debt. Yeah, that's nothing. Total debts. Oh, term debt. Here we go. Yeah, okay, it's I think pretty reasonable. You add the debts together, so you get around commercial paper. Guess you could add that together. Yeah, you get around 101. Okay, that's pretty reasonable. So all these companies are leveraged now. Okay. far these companies are not getting the benefits spending on AI infra and see a long path ahead. So the future is uncertain. Yeah, I wonder if this number actually decreases due to Blackwell not actually shipping on time. Yeah, so cloud business, right? I wonder if there's breakdowns for that. So Microsoft cloud business, Microsoft earnings. So cloud, okay. Revenue story. Looking at the cloud segments, so we have Microsoft Q2 cloud segment was 28.5 billion, 16% driven, 19%. By sure. Services. AI revenue growth of 29%. Okay, let's see. Microsoft Q4 earnings webcast transcript. Okay. Jeremiah, okay. Elastic, Siemens, Snowflake, and Teradata. Huh, so does MongoDB actually use Amazon to store most of its data? Okay, so GitHub's annual revenue run rate is on 2 billion, okay. Jeez, customers, okay. Keith Wise. Okay, so I guess that is interesting. Doesn't matter what it's used for, whether AI or just hosting for Azure. It seems like it is and can't use the same infrastructure. Huh. Okay. So it doesn't seem like they actually have revenues. Oh, maybe they do. Yeah, I'm tired. I'm starting to get a bit tired here. Yeah, man, I wish David Kahn has something for revenues. That would have been nice. July 8th. CoreWeave. Oh yeah, I think that was the co-location service. July 16th. Okay. Yeah, I think these are some good articles. I want to read the Ben Stashry one before I go to sleep. Then I'll probably call it a day. So section 2. So punished by a fine not exceeding $5,000. Huh. friends instead of enemies. Interesting. Okay. Yeah. Friendly Google enemy. Ben Thompson. Stratchery. Google was found guilty of violating the Section 2 of the Sherman Trust Act. Violating Sherman Trust. Yeah, what does Ben say? There's a good summary. Acquired a monopoly through search through vision. Let's see. Hey, still streaming, but I think I'm gonna probably end this soon. foster innovation. Having achieved a monopoly, it is forbidden from extending the monopoly through the use of contractual arrangements. Default search deals as with OEMs through the use of contractual devices / browsers, Apple, Mozilla, Sherman Act. To monopolize. Huh? Penis. Section 2 of Sherman. I just farted. Damn. Basically, this is saying that companies like Google can be paying other people to ensure that search engine. Okay. Okay, I think that's probably good for now. Yeah, this yen carry trade idea is interesting. It's been unwinding. I think the Nikkei, Japanese Nikkei, that was a nice lunch break, which is cool. Yeah, a huge decline, and then it's, well, shoot. Do you see a big sell-off though? Yeah, I don't know exactly what the economics behind this are. 51st Congress. but this was pretty interesting. So we had talked about non-farm payrolls. It seems like there's a lot of worry in the market for weaker non-farm payrolls in terms of new additions for cyclically adjusted non-farm payroll additions. But turns out that some of the detractors, most of it did come from the information sector, which isn't, I feel like, as strong of an indicator of a weakening economy compared to, let's say, manufacturing or construction, right? Now, another thing I was taking a look at, thinking of, is this whole generative AI play. Trying to understand how big this market is, what the spending is currently like, and how much is going to be needed for these companies to actually make it worth their while. And so this was an interesting article by David Kahn. This was a bit older, so I think about a month ago. And he had this idea of, okay, if you're going to take NVIDIA's data center run rate revenue, today it's around 90 billion. So most recent quarter, I think they reported like a 22 billion data center revenue. They reported a $22 billion data center revenue. And if you just annualize that, 4 quarters multiplied by 4 comes to around 90. Now, there's this trend in AI infrastructure development that $1 spent on GPUs means $1 spent on building out the actual data center itself. So whether it's buying land, building, cooling systems, energy actually needed to power, you kind of have this 1-for-1 spend. So it's going to double your cost. So that means your entire AI infrastructure is going to be twice the amount of the GPU spend. So 90, that comes to around 181. And then once you think about, that's just the cost of building out the whole AI infrastructure, you'll still need a profit. And I think a good sort of proxy for the profit is, let's say, a 50% gross margin for an end user like a Tesla, a Twitter, that actually uses these AI data centers for inference, for training. And so that's going to require another 50% gross margin, so doubling that. And that gives you to an AI revenue required for the payback of these AI investments. And that's ballooned to $363 billion today. And if you're to take a look at Q4 2024 estimates and use those run rates, David Kahn thinks it could balloon up to $600 billion. Now, I don't know the exact revenue metrics for a lot of these tech and AI-enabled services, but I'd imagine it's nowhere close to $600 billion, and it might take a while for the entire industry to get there. It may not even get there. 600 billion is a lot, although it's not unimaginable, right? I think collectively the Max 7 alone probably has a revenue of like 1.5 trillion. Okay, but with that being said, from the most recent earnings about 2 weeks ago, Meta, Amazon, Google, Microsoft, they are reporting higher than ever CapEx spending on building out a lot of infrastructure for AI data centers and cloud data centers. The good thing is, usually, if you build an AI data center, you can also use that for cloud applications or for running cloud services. Yeah. But you can see here that this is relatively in line with what David was saying, and that CapEx is ramping up for a lot of these hyperscalers. I wouldn't say all of this is being spent towards GPUs, but it's fairly close to the 300. Total CapEx spend. Yeah. So if it's 22 billion on GPUs for NVIDIA, I mean, I'm not even counting then Intel and AMD. Okay. All right. Yeah. Hello, Allison.
Mister, I'm gonna end the stream.
Yeah. So with that being said, I'm going to end the stream. So thanks for tuning in. Interesting Goldman Sachs reports. And I'll catch you guys tomorrow. Peace.